Yet most people still think silver's lagging. It's not. It's catching up to gold. And there are certain technical levels not far above where we're trading right now that if silver spread versus gold can reach those levels, the spread chart and the momentum of the spread chart, which is what we look at, both technical metrics, have very clear pending triple top breakouts, meaning levels that they've stopped twice before. And if you punch up through that, these levels go back several years, by the way, you're breaking out big time. So if you looked at these charts, these spread relationship charts, and treated it as a price chart, you'd say, "Ooh boy, you break through that and I'm gonna blow the cork off this thing." The spread is about to do that, I think. And when it does, I think in the next handful of months between now and the end of the year, silver's likely to be in the $60 to $70 price range. As I said, so many years have passed that the real value of the money unit that we're measuring by, the dollar in this case, or you could do it with euros or anything else, is just meaningless. The decay in the dollar has been so great that, again, to match the real converted value of silver in 1980 at $50, you'd easily have to be a couple $100, maybe more. And in even 2011, you'd well over 100, I'm sure. So those are really sort of jokes. And our assessment is that, one, I don't know how high silver's going. I think it could go into the hundreds, 100 to 200, would not surprise me. But we're taking it in segments. And my own personal investments, which we show at the end of each report, the disclaimer, are heavily in silver miners as opposed to gold. Okay, though gold is the mama, it's going up. Silver has both outperformed and underperformed gold on a routine basis over the decades. And if you go back 50 years and look at what is the highest relationship of silver to gold in any one of those given years, and plot it, we have a graph we put in the latest report. 2%, meaning divide an ounce of silver into gold. Silver was 2% of the value of gold in 20 of those 50 years. So it's not absurdly, to be unexpected to see silver at 2% the price of gold. And in fact, in bull trends, like 1979, 1980, 2010 and 11, silver got up to 3.5 and higher the price of gold. Well, right now, silver's 1.12%. Okay. Still dirt cheap. It got under 1% recently, which is historically very, very low level. When you see that, buy it. But when that spread turns up, and it's been turning up sharply, well, just for example, this year, people don't realize this. Silver's up 42% on the year today. Gold's up 37%.
Gold may be the traditional safe haven, but silver has always been the volatile younger sibling, capable of underperforming and outperforming dramatically. Historical data shows silver has often reached 2 to 3% of gold's value during bull markets, yet today it sits at just over 1%. That gap signals historic undervaluation. Even in 2025, silver has surged more than 40%, quietly outperforming gold while most investors remain unaware. If the ratio reverts to historic norms, silver could quickly double in value. Technical charts now suggest a looming breakout that could push prices into the 60-70 range by year's end.
Yet most people still think silver's lagging. It's not. It's catching up to gold. And there are certain technical levels not far above where we're trading right now that if silver spread versus gold can reach those levels, the spread chart and the momentum of the spread chart, which is what we look at, both technical metrics, have very clear pending triple top breakouts, meaning levels that they've stopped twice before. And if you punch up through that, these levels go back several years, by the way, you're breaking out big time. So if you looked at these charts, these spread relationship charts, and treated it as a price chart, you'd say, "Ooh boy, you break through that and I'm gonna blow the cork off this thing." The spread is about to do that, I think. And when it does, I think in the next handful of months between now and the end of the year, silver's likely to be in the $60 to $70 price range. And I think the surge will also carry us highly likely to a 2% level, which again is routine. Well, that's a huge move because we're talking almost doubling the current relative value of silver to gold very rapidly and going up to that, quote, normal 2% level. because we're, like I said, 1.12% right now. So anyway, I think there's a huge explosive potential in silver, coincident with the rise in gold, but advancing more so. And so that's why my personal emphasis is in the silver aspect of the monetary metals.
Silver's story isn't just monetary, it's industrial. Once tied to film photography, today silver is indispensable in solar panels, electric vehicles, and the infrastructure powering artificial intelligence. With China producing nearly 90% of the world's solar panels, demand remains relentless. Global mine supply, however, has plateaued. This tightening balance between supply and demand creates pressure that financial markets cannot ignore. Analysts note that silver's conductivity makes it irreplaceable in next-generation technology. When prices rise, mainstream media may blame industrial demand, but the reality is that silver has always been money first, industry second. Both roles now reinforce each other.
First off, I don't look at it that much, and I try not to, okay, because I don't want to be distorted by a notion of fundamentals. Why? Because quite often fundamentals, even if they're true, even if your assumptions are correct, that doesn't tell you about the timing. Mm-hmm. You could be right and not be right in terms of price reaction for 2 years, okay? You know, do you remember the movie The Big Short?
Yep.
The guy, these 3 or 4 analysts around the country, different guys, didn't know each other, all came up with the same conclusion. There's going to be a mortgage crisis. There's no way around it. They pounded the table, okay? That was 2005, 2006. And it wasn't until late 2007 that the stock market finally topped. And it wasn't until 2008 finally that they said, I was right. So you get the point, fundamentals. Mm-hmm. Okay. Silver does have certain unique, we know the industrial aspect. It used to be, you take a picture, that silver was a key factor in photography. Now it's a key component of solar cells. And it's also, as I understand, essential in the big AI explosion because silver is such a good conductor. Okay, well, the numbers that I've seen, and I don't know the validity, they probably are because I see them from too many places, of supply demand on the industrial side is very tight. Annual production of silver is not increasing, it's plateaued, and demand is continually increasing. And by the way, China is one of the chief demanders of silver because they're like 80-90% of global solar production, solar panels, which silver is essential. So anyway, that could become a factor where, let's say we cross 50 and CNBC needs an excuse to explain it, okay? And that's a good excuse. Oh, well, the industrial demand, well, that's true now, but sometimes it takes a while for that reality to finally be used as the excuse. The bigger issue is silver's money, just like gold.
History reminds us silver has always been money. The United States once minted it as legal tender, and civilizations from Rome to China relied on it as currency. Despite modern attempts to frame silver as just an industrial commodity, crises reveal its true character. In times of financial stress, silver behaves like gold, an anchor against failing currencies and collapsing trust. As global inflation accelerates and central banks lose credibility, silver's dual identity becomes critical. It is not only a resource for factories, but also a shield for savers. That dual purpose makes silver uniquely explosive in today's environment.
A lot of people like to treat it as not monetary metal, but as history shows, it has been. In fact, the U.S. has had silver as official money, too. So I think the crisis we're facing in global assets, global suffering, economic suffering, not just U.S., is going to be such that you're going to get a lot of things thrown up in the air in doubt, where you doubt the validity of a certain institution to provide what it's supposed to provide, like the central bank. You suddenly realize the value of the stuff in your wallet is decaying so rapidly it's ridiculous. As I said, your grandfather, father, and you, house cost, loaf of bread price when I was a kid, it's no longer 20 cents, okay? Anyway, there's a point at which the pain gets so bad that it's 52 card pickup. And I think the stock market will be a big key in that. Why? Because right now, if you look at, let's say, the average guy who's got a retirement account, maybe it's through state government pension fund or whatever, no, it's if he looks at it nominally and it's been going up, because if it reflects the S&P, then it's been going up. Okay. Not a lot, by the way, over the last year, but, single-digit percent still. It's the only thing he's got to smile at. Everything else in his life is questionable. Cost of things are going up, et cetera, et cetera. And when that goes down, then it's, oh, hell, what's good? All you need then is some layoffs, et cetera, et cetera. And suddenly the average guy, instead of a sense of expectation, is a sense of doubt. And that creates fear. And when you create fear, the tone of markets change. And that's when institutions can get overthrown, ousted, abolished. And so it wouldn't surprise me that in a year or two there's no Federal Reserve. If the economy gets bad enough, which I suspect it will, there may not be any income tax, simply because it doesn't function. They go to a sales tax, etc. All kinds of things can change in big ways. I think that's the kind of situation we're facing now.
The global financial order is fragile. Rising living costs, strained pensions, and declining trust in central banks expose deeper cracks. Investors cling to rising stock markets as their last source of optimism, but when equities stumble, confidence will unravel. History shows that fear transforms market psychology faster than data ever could. As panic spreads, long-standing institutions like the Federal Reserve or even the income tax system itself could face structural change. In such upheaval, silver's role as an independent store of value may become essential, not optional. The metal could serve as both hedge and lifeline during systemic shocks.
When it originally came out on futures, which is December 2017, we started analyzing it routinely, and we've called every major up and down move in Bitcoin fairly well. In fact, we got bullish in, I think it was 22, 23, when it was coming up through 20,000 after having a big drop. But the technical works that we do on Bitcoin, now that we look at the price chart like everybody does, and you think, oh man, it's going up forever. Bitcoin now moves, we ran a chart of this, so I'll talk about price first. You can overlay a monthly bar chart of Bitcoin futures on top of a monthly price chart of the NASDAQ 100. They are the same beast. They inhale and exhale in sync. Not day to day, but usually month by month for sure. And Bitcoin, for example, had a puke into April, just like the stock market. Bottomed the same time, turned up, went back to the high, nudged out a new high. Okay, it had old highs around 110,000 late last year, and early this year 110,000. Then it had the drop into the mid 70,000s, came up through the 110, went up to 125,000. Everybody thought, oh, it's going to go to 1 million. We all know this, okay. And Trump's in it too. He's getting rich, okay, in crypto. Notice what it did last month. Came back and closed the month out below 110,000, meaning this process that it's had on price of layer of selling, then break through and surge, pull back, hold the support, go up again, break through that last ceiling. This time it came back down below that last ceiling and closed out a month, indicating that breakout above the plus 110,000 level didn't hold. Right now we're trading around 110,000.
Bitcoin once promised freedom from government money, but its fate now mirrors Wall Street. Charts show Bitcoin moving in near perfect sync with the NASDAQ, tying its destiny to the broader stock market. Current technical signals hint at vulnerabilities eerily similar to the 1987 crash pattern in equities. If Bitcoin collapses, the shock would ripple through corporations and funds increasingly tied to crypto, striking both investor psychology and financial stability. Such an event could act as the spark for silver and gold, reminding the world that true monetary assets are not digital promises, but tangible metals with centuries of trust.
When we run momentum on Bitcoin, our primary emphasis of analysis, quarterly momentum, 100-week average momentum, what that means is we're taking the price action and measuring it, whether it's above or below, and oscillate it as an oscillator compared to that moving average. And we get a different technical picture than when you simply look at the price chart. And what we see on Bitcoin, and I've pounded the table on this, we're not triggered it yet, so don't act on it. When you get into next quarter, the 3-quarter moving average of Bitcoin will be adjusted because it's a new quarter. will jump up to about 101,000. Since 2022 upturn, 2023, it's pulled back 3 times before to that rising 3/4 average, meaning on the oscillator, you see this repeated drop down to what's the zero line. When you look at the momentum chart, you see a floor from hell. You better not break it. It's an exact overlay of 1987 S&P prior to its crash. It has crash dimensions, and the number this quarter is down in the 91,000s, but it's going to adjust up in 3 weeks, next quarter, to around 101. And we've got some other long-term momentum metrics that agree with that, such that if you ooze back down, now we're 15,000 off the high, 125, we're now 110, which is not a good idea to be where we are anyway. We got down to 108 recently. You get down around 101 again, starting next month, next quarter, you're going to be on that structure and you will not hold it. In which case, I bet that NASDAQ will also be dropping. Remember, they're coincident. NASDAQ and S&P do not look like they have crash events near term. In other words, they look like they could go down again, another major leg, but not a crash. That's like 30-35% in a matter of weeks. Bitcoin does have that attribute. And I think that would be a psychological and financial ambush to the stock market, because so many corporations now are embedded in crypto. They weren't years ago. 5 years ago, it wouldn't matter if Bitcoin went down to them. Now they're entrenched in crypto. They believe in it too. And so you've got financial markets that are now linked to Bitcoin, not just speculators that are all frothy. And if you break that market in a manner that we think it could break, once you hit our trigger levels, that's the condition, watch out. That could be an ambush from the side that nobody's expecting. And that's when the guys who think that Bitcoin, being, quote, a non-governmental money, suddenly isn't a competitor to gold. And that ambushes them emotionally when that happens too.